Welcome back, everyone. In our last episode, we learned how to buy your very first stock. Today, we are going to talk about something even more powerful for beginner investors: ETFs and index funds. You've probably heard these terms before, but what do they really mean? And more importantly, why do so many experts say beginners should start with them? Let's break it all down in simple terms. Section 1. What is an ETF? ETF stands for Exchange Traded Fund. Think of an ETF like a basket full of stocks. Instead of buying just one company, like Apple or Google, an ETF lets you own small pieces of many companies at once. For example, imagine a fruit basket. Instead of buying only apples, you get apples, bananas, oranges, and grapes all together. That's what an ETF does for your investments. It gives you variety, or what we call diversification. Section 2. What is an index fund? Now, an index fund is very similar. It's also a collection of many stocks. But there's one key difference. An ETF is bought and sold on the stock market throughout the day, just like a stock. An index fund is usually bought directly from a fund company and priced only once per day. Both follow something called a market index, like the S&P 500, which tracks the 500 biggest companies in America. So, when you buy an S&P 500 ETF or index fund, you're basically investing in a piece of all 500 companies, including Apple, Microsoft, Amazon, and more. Section 3. Why ETFs and index funds are great for beginners. Here's why so many investors recommend ETFs and index funds when you're just starting out. Diversification. You're spreading your money across many companies, so you're less affected if one company struggles. Low cost. These funds often have very low fees compared to actively managed funds. Automatic performance. You don't have to guess which stock will win. If the overall market grows, your fund grows too. Simplicity. One purchase gives you instant access to hundreds of companies. Section 4. How to buy an ETF or index fund. The process is the same as buying a stock. You'll open your brokerage app or account. Search for the fund's ticker symbol. For example, SPY for the S&P 500 ETF, or VOO from Vanguard. Choose how much you want to invest. Place your order, market or limit, just like before. Once it's in your account, congratulations. You've instantly diversified your investment across the world's biggest companies. Section 5. Common misconceptions. Let's clear up a few common myths. Myth 1. ETFs are only for rich investors. Not true. Many brokerages let you buy fractional shares for as little as $5. Myth 2. ETFs are risky. Actually, they're generally less risky than individual stocks because they spread your risk across many companies. Myth 3. You need to check them daily. Nope. ETFs and index funds are meant for long-term investing, not day trading. Section 6. Real example. Let's take a quick example. Imagine you invest $100 every month into an S&P 500 ETF for 20 years. If the market grows at an average of about 8% per year, you could end up with around $60,000 from just $24,000 invested. That's the power of consistency and compounding. It's not about timing the market. It's about time in the market. So let's recap. ETFs and index funds let you invest in many companies at once. They're simple, low cost, and perfect for beginners. You can buy them easily through any brokerage app. In our next episode, we'll explore how to build a beginner investment portfolio step by step, combining what we have learned so far into a real plan you can follow. If you found this helpful, please like the video, subscribe for more lessons, and comment below. Have you ever invested in an ETF or index fund? I'd love to hear your experience. Thank you for learning with me. And remember, small steps today lead to big wealth tomorrow.